Hey there, financial enthusiasts. Welcome back to Currency Wizard, where we break down the complexities of money matters. Today, we have an intriguing topic on the table: 5 ways rich people use debt to make money. If you're ready to explore the strategic financial moves of the wealthy, you're in the right place. Let's dive in. First on our list is leveraging real estate. Wealthy individuals often use debt to invest in real estate, and here's how it works. By taking out mortgages or loans, they can acquire properties, whether for rental income or appreciation over time. The beauty of this strategy lies in the ability to amplify returns with borrowed funds. The key here is to choose properties wisely, ensuring that the potential returns outweigh the costs of financing. The wealthy understand the long-term value of real estate and use debt strategically to build their property portfolios. Now, let's talk about strategic business financing. Successful entrepreneurs understand the power of using debt to grow their businesses, whether it's securing loans to expand operations, invest in new technologies, or explore lucrative opportunities. The goal is to generate returns that surpass the interest on the borrowed funds. This strategic use of debt allows businesses to scale and thrive. It's a calculated risk, and the wealthy leverage their understanding of their industry and market trends to make informed decisions when it comes to business financing. Moving on to number 3, investing in stocks with margin. Some affluent investors use margin accounts to buy stocks. This involves borrowing money to invest in the stock market. While this strategy can amplify potential returns, it comes with risks. Investors need to carefully manage the borrowed funds and be mindful of market volatility. Wealthy individuals who engage in this practice often have a deep understanding of the stock market, risk-managed strategies, and the ability to make informed investment decisions. Now, let's explore venture capital and private equity. Wealthy individuals often become investors in venture capital or private equity funds. These funds use a combination of their own capital and borrowed funds to invest in high-growth startups or established companies. This strategy allows them to diversify their investment portfolio and gain exposure to innovative and potentially lucrative ventures. Returns from successful investments can significantly outweigh the cost of borrowed money. This approach requires a keen eye for potential opportunities and a high tolerance for risk. Last but not least, using debt for tax advantages. Wealthy individuals sometimes strategically use debt to benefit from tax deductions. For example, mortgage interest on a primary residence or investment property can be tax deductible. By incorporating debt into their financial structure, they optimize their tax position, ultimately reducing their overall tax liability. This approach requires a thorough understanding of tax laws and a meticulous financial strategy to ensure that the benefits outweigh the costs. And there you have it, 5 ways rich people use debt to make money. It's essential to remember that while these strategies can be lucrative, they also come with some risks. Before diving into any financial venture, thorough research, consultation with financial advisors, and a clear understanding of the associated risks are crucial. If you found this video enlightening, don't forget to hit the like button, subscribe for more insightful content, and share your thoughts in the comments below. Until next time, stay financially savvy, and we'll catch you in the next video on Currency Wizard.